Hi, good morning, everyone, and welcome to the 41 episode of Let's Talk About Market. Uh, so, if you see the Nifty index, it has gone higher today, and in the last 2 days, it has seen a very good gain. Now, there are few short-term indicators, extreme short-term indicators, which are suggesting that maybe the pullback can happen. Now, what are the levels to watch out for? How can you trail and ride this trend? These will be the discussion points. And what is the options data also telling us? Broadly, this is what we'll touch upon. Apart from that, I was looking for the other peculiar theme if we are seeing any, but I couldn't see anything interesting. So I'll spend more time on talking about the short term extreme, the extreme short term sentiment data, and what those options data are telling us, and what is the sector that is coming back to life. So these will be the talking points. So let me quickly share my screen. Okay, you can let me know if you all are able to hear me properly, and if you all are able to see my screen. Okay, is my screen visible? Can any of you please confirm? And more importantly, if you all are able to hear me properly, if the sound is fine. Okay, thanks, CBK. So let's start. So firstly, if we see the Nifty index, in the past couple of trading session, it has seen a very sharp reversal. Uh, if you see the structure, sorry, let me mute it. Yeah. So over here, basically, the Nifty index had formed a falling wedge pattern, right? And from there, a reversal was expected. And also, if you might be aware that many of the extreme short-term sentiment readings like daily swing and all had gone to oversold zone. So all this were pointing out towards a reversal that can happen. Now, the question was that, is this a pullback, and are we going to fall again? Okay, or is it going to be the start of a new move? So for that, I still don't have a right answer or a very confident answer to that. But all I can say is that right now, from here, the bounce was expected towards 50 to 61.8% retracement level. We are sort of reaching there. And now, the ones who are extreme short-term traders, maybe even intraday to 1 to 3 days kind of people who keep position for that time frame, they need to be a little more careful. Now, I'll tell you the reason why. Okay. Firstly, as you can see, that the Nifty index is sort of approaching the 50% retracement level, that is 25,020. Now, this is one thing, right? Now, even if you see the sentiment data, and if you see the extreme short-term indicator like swing, it is almost approaching towards that 80 mark. In fact, in the morning, it had gone to almost 80 levels. Now it seems like there has been some cool off. And average swing also, if you see, it has come out of the oversold zone. Okay, and it has been steadily inching higher. But yeah, it has come out of the oversold zone. And also the diffusion indicator that we saw, percentage of stock with RMI buy, which had also gone to extreme levels on the downside. Even from there, we have seen some sort of turnaround. So all this, suggests that recovery is on the way. But if you remember, for extreme short term, the setup that I had mentioned you was call minus put histogram, daily swing, and average swing, right? Well, when all these three things come towards an overbought zone, that's where you need to be very, very careful. But over here, now you can see in the chart as well, right? So whenever this call minus put histogram comes to red, and this, as I had mentioned earlier also, specifically after 2022 2023, we have started to see this pattern, right? That 1 or 2 days of this call minus put histogram coming in red, we end up seeing some sort of short built up happening, or some sort of selling pressure also coming back, leading to very short term tops. Now you can see over here that there were 3-4 days of up move. So in this case, basically the exceptions can be there of few days, but all you will see over here is that call minus put coming to red. uh, it basically means that there are more puts being shorted now as against call, and that's where people are becoming bullish. So that is what it suggests. Okay, now in the past 2 days there has been built up in this call minus put histogram, and this red bar is getting slightly bigger than the previous day. Now of course today, I mean, all this we are calculating end of the day data, so we need to see how this unfolds at the end of the day. But given that we are coming to the 50% retracement level, as I mentioned over here, we are approaching that mark, which is around 25,020. And given that these indicators are also hinting towards maybe a minor pullback, so in this case it might not necessarily be a major top or something. But yes, I mean, whether that happens or not, that we need to see, but at least in the near term we need to be a little more cautious. Now also one more reason for that is, when you go to the options data, go and check the open interest. Okay, do the combined OI. So combined OI includes all the expiry. Okay, just to give you the context, these many expiries are open for Nifty index. Okay, which includes way all the way till 2030 as well. So when you do combine, it takes the combination of everything. Okay, it's the tomorrow the weekly expiry that is there plus everything. It takes into account all those things, right? So now if you see over there, one thing is that the PCR is around 1.30, which also I mean, which seems like good reading on the upside, but I have seen it even going to point 1.5 1.6 as well. So maybe over there some room is left. But the important part is, there is a huge open interest built up at 25,000 levels. Okay, and now if you see this 25,000 level, why it is important is because, firstly, as I mentioned, that there is a lot of open interest built up over here, and secondly, if I remove the combined OI and I see the OI for purely for tomorrow, okay, which is for Tuesday's expiry. So over here as well, 25,000 call has a very big open interest, and on the downside, 24,900 as a significant put open interest. So in fact, today we are seeing a huge put built up that is happening. That you can see it from here as well, right? The red bar is much, much, much more than the green bar, and that way, there is a significant shorting of put also that is happening, and that is one of the reason why we are seeing positive momentum in the market. But now someone will argue that, okay, the future price is at 25,083. So why so have we not broken above that? The answer to that question is that if you see the weekly expiry, so they just expire slightly. Sorry, just give me a minute, I'll mute this. Yeah. So, so if you see the weekly expiry, they almost are a replica of the spot price. So there is something called a synthetic future price, which we calculate by adding call and put and so on. But that is slightly above usually the spot level. So say for example, spot level is somewhere around 24,990 or so. The synthetic future price will be, say, somewhere around 25,000, 10, 20, something like that. Okay, so the broader point is that the synthetic future, which means uh, the the future price, I mean the options value based on which tomorrow's expiry will happen, I mean, that is somewhere around 25,000 mark, and that is why this is very important. Okay. Uh, so we need to see how this unfolds. So one thing that I would want to see very closely is whether the Nifty index is able to sustain about 25,000 or no. And if it sustains, then do we get a closing above that? Because if we get a closing above that, as I mentioned, I mean, the Nifty index, if you see, it is at the 50% retracement mark, and the 50% retracement level is at 25,020. Okay. So that will be the level that needs to be taken out. And basically, if the closing happens about 25,000, then we might end up seeing a good short covering as well, right? So that might lead to the break on the upside of that important level, and that is why I'm watching this level very closely. Sure. Okay, I think I hope you all are able to hear me properly. Let me just. I thought that. Okay, I think my net is good. Yeah. So as I was mentioning, that 50 and 61.8%, I mean 61.8% is like an ultimate level that I will be watching out for. That is 25,120 or so. But in the interim, I would want to see whether 25,020 is also getting broken or no. Now, the reason why I'm emphasizing to be a little bit more cautious is because even if you see the FI's activity, okay, I mean, despite of this, good move that we have seen in the past 2-3 days, they are simply shorting, okay, and there is no respite from there. So that is why I'm just wondering if they know something that we don't know. I mean, that is the only thing that is bothering me. So once I think the 25,100 mark, sorry, 25,120 mark, which is nothing but the 61.8% retracement of this fall. If that gets taken out, then I think they will end up seeing. I mean, they will end up covering their shorts, and that's where we can probably see a good move also on the upside. So as I have been mentioning for past few days, I mean, since we are doing this live sessions, is that you know this level needs to be taken. So a break above the 61.8% retracement level will be the indication that at least we are going back to this trend line. And once this trend line breaks on the upside, it will be an indication that this entire consolidation that we have seen, or sideways action or correction, whatever you call it, that is probably coming to an end, and we could be inching higher. Okay, now there are some early signs of green shoot that I'm seeing. Which are those? So basically, if you see Bank Nifty index, okay, that has broken above the previous high, okay, and that too with a good gap. So that is a good sign. Now, what we might want to see is what Bank Nifty does over here, because it is almost around the 61.8% retracement level, and over here we have the previous swing high as well. So broadly 56 150 sort of levels on the upside is what we'll be watching out for, whether it breaks or no. If it breaks, then I think there can be some positive momentum over here. And the one sector that is probably coming out of seeing a good correction is actually Nifty IT. I'll tell you why this looks interesting to me, and all this is happening ahead of the result season. So over here, basically, this was the breakdown that we have seen, correct? This was the breakdown that we had seen, and now Nifty index is trying to come back above that breakdown point. So whenever that happens, I mean, if the Nifty IT index closes above this trend line and starts sustaining about this, then I would expect that this will become an important support, and as long as that doesn't break, it will attempt to recover and probably move higher in the coming days. And yeah, so what I would be looking out for is firstly a close above this trend line to give us some confidence. Later on, what I would want to see is prices breaking above this daily averages, and RMI also giving a bullish crossover, and sustaining above this will give me further more confidence that this was a this was a bear trap, where there was a false breakdown that happened. Eventually there was a pullback, and now bulls are probably coming back to the game. So these are the two indices that I would want to watch very closely. And mind you, I think if we add Nifty IT and Nifty Bank, I think that constitutes to somewhere around 40 to 45% of Nifty index. Okay, so the two bigger index which were there, it is starting to look a little more promising. But as I told you, need to see how it develops, and more importantly, I need to see how the Nifty index closes today. Okay, a close about 25,020 or 25,000 levels as well will give me some confidence that the high open interest that we are seeing at 25,000, that might end up that might start going for a toss. In fact, let me see if since half an hour or so have they started covering or no. So you can see over here what I've done is that I am now trying to see the OI change in last half an hour. Okay, which means from 10:45 till current date. Till current timing, and you can see that there are meaningful short covering that we are seeing. It was basically in the morning only that people had started adding shorts. Basically, say somewhere around 10 or so in first 45 minutes. But after that, there seems to be a steady short covering that is happening. And also, let me also see where the max pain is. Is it inching higher or no? So that might also give us this additional confidence about trend. So yes, there has been some shift in the daily, the max pain level. So from 29,000, it has gone to, 24,900, it has gone to 24,950. Let me just remove the intraday and see the trend. Okay. So here you can see that, in this up move, there has been steadily, the max pain level has inched higher. So this is a good sign. Now, what we need to see is whether this acts as a support or no. So as I had mentioned, typically, if the up move is happening and the max pain is not inching higher, that means the people who have sold calls, who have bought calls and so on, they are not moving ahead. Typically, you will see, you will end up seeing the expiry happening somewhere around the max pain level. But as I am telling you once again, over here, we are taking the future price at this point of time, but you have to consider and think of, spot price, because the weekly closing or the weekly expiry happens somewhere close to the spot price, given 20, 30 points up or down. Okay. And see, as we have seen this 11, 18, 11, 19 update, there has been further uptick in the max pain. So this is a good sign. So need to see, how this develops and, how this up move unfolds. But yes, if you are at the 25,200 levels, 25,020 sort of levels in the Nifty index, so it does make a little sense to lighten up your position a bit. Or in fact, if you want to trail it, you might want to go one time frame or two time frame lower, depending on your risk appetite. And so over here I can see that there is still a lot of room that is there left on the downside. So I'm just trying to see on what time frame is it respecting the averages, right? So over here you can see that there was a nice up move consolidation holding about 20, and it was inching higher. So you might want to trail your reversal level with probably 20 or 40, and then try to ride this trend. So yeah, I mean, in fact, on 15 minutes, I'm seeing that it is nicely taking support of the averages and the setup. So over here, ideally, what I would want to keep is 24 868. That is the 40 HEMA. Since it is respecting that, that can be a good watching point on the downside. If this holds, then probably there can be some pullback and so on, but it can continue. So yeah, I mean, broadly on the upside, 25,020 to 25,100 are the important levels to watch out for. I think once we are about 25,100 or 120 levels, that's where positionally things will start looking up. This was a big dampener. Frankly, I had not anticipated such bigger correction. But if the 25,120 mark on the upside is broken, then the medium term bullish setup, which the all the medium term sentiment indicators are pointing out, that can hopefully now come true, provided the Nifty index breaks and sustains about 25,120. So that is it from my side. Now if you'll have any questions, you can let me know and I can try to address them. Okay. Akhilesh. Sorry, Akhil Vyas, good question. I am also checking USD INR and what it does. So, see, one thing that is happening is that DXY, okay, there seems to be some turnaround. Okay. So over here you can see the RMI briefly went towards the bearish zone, but the averages were held and now it is again rising higher. Dollar index seems to be looking okay. I mean, where it can see some sort of up move. Now in this backdrop, what does USD INR does? I mean, I have no clue, but at this point of time, what it is certainly doing is that it is respecting this setup. 2040 is holding and it is rising higher. So as long as this 40-day does not break on the downside, I mean, we need to be open to the idea that it can rise higher towards the upper end of the this rising channel that we are seeing. So wait, let me properly draw this channel. I mean, that is what we need to be open to. And yeah, I mean, Dixie, DXY, trying to bounce higher. I don't know if this can again, cause some sort of pause in the Nifty index. So need to see. I'm not too sure. Even I am watching the price action very closely and seeing how things unfold. Mohan, I think in the 40 episodes of discussion, what we have done, I think I have tried my best to, teach you all how do I also analyze and so on. Please avoid, stock specific asking question. In fact, you should be telling me that, this stock is looking interesting based on RRG or something like that, because, we have discussed variety of, indicators and, tools. So please, the whole idea of this session is not to give recommendation or anything, but learn together. In fact, to be very honest, after doing these sessions, there were so many things that even I got to learn. I mean, people pointed out about Hind Copper, Hind Zinc, and so on, in this very platform, and they were the ones that brought to my notice, and that's where I started tracking them. So, let's have that sort of discussion. And yeah, in fact, there was one more thing that I wanted to point out. So while I was checking RRG and few of the indices, now there are some indices where I'm starting to see some cracks. I mean, not cracks, but loss of momentum, which is Energy, PSC, and PSU Bank. Okay. need to be a little careful. This clicked me. That is because someone asked about PNB, and that's where we are seeing some loss of momentum over here. So in the very short term, you need to be a little careful. So let me see Nifty PSU Bank. We can discuss about the indices, but I don't want to get to that stock specific level. Okay. So you can see that there is some sort of pullback that has happened over here. Nifty PSC. Okay, similar thing. We have seen a pullback over here. Nifty Energy. All these indices were anyways, pointing, or they were showing some weakness since the past couple of days, since the momentum was going down. And now with today's red candle, it is becoming even more prominent. So, be a little careful from that index, because these three index, because these were mainly the ones that were doing good so far, but there is some loss of momentum that is visible. So, any other questions you all have? I mean, regarding index, we can discuss, but you know that there are a lot of tighter norms that have come for stock specific discussion. So that's where I want to avoid it and maybe keep it more on the broader level. Any other question you all have? Metal sector is showing weakness, correct? If I'm wrong, apart from gold and silver. So, Paul, see, what is happening in the metal sector is that, in fact, today there is some turnaround that is being seen. And wait, I need to see how they are doing on the weekly as well. Wait, Nifty metal. So on weekly, there is no signs of weakness so far, but on daily, certainly there is some turnaround of momentum that is happening. So if you are a very short term guy, then maybe you might want to trail it with some reversal level, say 20, 40 or so on. I mean, in fact, in this case, for example, if the 40 is gone, maybe I'll be a little careful and be open for a little more correction, probably till either this zone or the retest of this breakout point that we have seen. Maybe somewhere over here I might expect, if the 40R is broken on the downside. But as I mentioned, I mean, even in weekly, for example, this PSE and so on, they are all steadily inching higher. I don't think there is a weakness over there. In fact, if you see the PSU bank, okay, they have been coming up. So there might be some bout of correction here and there. I mean, in PSU banks, since past 3 to 4 sessions, the momentum was declining. So, I mean, today's decline might not be a surprise because, the momentum was already losing its steam. Now, if you see PSC index, over here also from weekly RRG perspective, there is a gain of momentum which is there, and there is slight improvement in the RS ratio as well. So if this if this trend is going away, then for the weekly, from a weekly point of view, it's a sign. I mean, it can be a case of being a little more careful, but that's where in the short term, given that they have been in good up move as well, so you might want to trail it with the reversal levels and then see where it takes us. Because at this point of time, as I mentioned, I mean, Nifty is also coming to a critical level, and I'm just wondering that if these were the strong sectors, I mean, seeing a cooling off over here, I don't know. I mean, is this some sign of weakness that is coming back? That is what it will raise my eyebrow. So that's why, as I mentioned, hourly averages is important. If this breaks on the downside, then be open for a little more correction. Now, whether it will translate into a bigger correction, it is very hard to say at this point of time. But it's only if the daily averages breaks on the downside. I mean, that's where you need to be really worried then. So Yeah, I think I have tried to address that question. Are there any more questions? Else we can wind up the session. Any more question related to market index or any of the tool that we have on strike which you are not able to understand? I can help and clarify those doubts. Else we can wind up the session and probably catch up tomorrow. Okay, so I don't see any questions. So let's call it the day for today, and let's catch up tomorrow and see what it does. And more importantly, watch out for the Nifty closing, whether it happens about 25,000 or no. If it happens about 25,000, you can expect some short covering to happen tomorrow because the open interest is very high at 25,000 level. So that can lead to some, 100 to 100 point bump up as well. So 61.8% retracement level of the recent fall that we have seen, that is at 25,120. Okay. So if the Nifty index starts sustaining about 25,000 level, 25,120 will be the ultimate level to watch out for. And two three things to watch out for today. By the end of the day, check where the call minus put histogram is, and check if the FIs are covering their shorts or no, because in this past 2 to 3 days we have seen almost a 500-600 point kind of move, and they have not budged so far. Okay, so these two things you can check out for. Okay, so I'll take up one question. It is from GP Kalu. Your question is, how do you view Bollinger Band expansion in daily, but constricting in hourly? Example, United Spirits. For option trader, it's a bit confusing whether to base it on daily or hourly when the price action is confirmed. Okay, so okay, I understood your question, GP. So see, daily time frame is basically for knowing the trend. Okay, let me be very clear. Daily time frame is to know the trend, and hourly time frame is for your execution. Okay, so say for example, now I am just taking this as a for the discussion, not a recommendation, but say United Spirits. I think I know why it has come in your radar, because it was seeing some sideways consolidation, and whether it is now breaking above it or no, right? I mean, that is the question that many might have. So see, firstly, what is happening is that on a daily basis, on a daily closing basis, this resistance has not been taken off, right? So over here, I mean, this is one thing where you need to be a little careful, because if this is a range bound movement that is happening, then United Spirits is actually towards its upper end of the range. Okay, the second thing, as you mentioned, now say for example, if you were in this trade, if you were long, then probably I would keep this hourly averages as my reversal level. Okay, but if you want to take a fresh trade, then probably you would want this range to be broken on the upside. Okay, and see, now there are different ways to build position, because sometimes what can happen is that you will end up seeing a breakout, then a consolidation, and then again a breakout. Okay, now when you are dealing with options, you have to be very very careful. You have to be very very careful on the timing, and that's where I think, apart from trailing, you have no other way to know what is going to happen. But in case of United Spirits, if this has to break out, then the expectation will be that it will either start moving from here, or it might see an would dip till here and then see an up move. In such cases, what you might end up seeing is hourly RMI coming back to the zero line and so on. But this is what I mean, Rohit sir puts a lots of emphasis on this. Honestly, I mean, I don't have that greater expertise in options. I can read the data, but I mean, trading options is it requires a lot more attention and so on. And because of we have been developing strike, I cannot fully concentrate on that. But I'll give you the broader gist of it. See, all you're trying to play in hourly is the hourly momentum cycle. Okay. Now say for example, if there is a bullish crossover over here and you are seeing some setup that is happening, so that's where you might want to go long. But the whole idea is to ride this hourly trend, because once it gets into the sell mode, there can be two things that can happen. Either it can go sideways. If it goes sideways, it will go sideways above the averages, and after that it will start picking up the next move, in which case you might end up seeing something like this. Then you might want to play this next cycle on the upside. Okay, because over here, to know whether this is going over here and then rising higher or it will correct, I mean, it is very difficult to know. So that's where, I mean, if the RV RMI goes into sell, maybe you might want to book out some, and finally some position you might want to just keep trailing with the averages. Okay, in such case, I think 20R would be the best one, because if 20R breaks, then there is a possibility that this might try to end the cycle, and which can take few days of consolidation. So that is where it is. I mean, if you were long towards the lower end of the range, maybe book some, and rest, you trail it with this. But if you want to do a fresh entry, probably I would wait for this range to break, and of course I would want to see what the data on strike OI insight is telling me. So United Spirits, oh, I can see a very big range over here. I'm not sure why 1520 has seen a big addition. Let me just go and check. 1520 seeing an addition is a bit strange. And that too entirely, all this has happened. So the call open interest is 8,43,000. And all this change has happened today only. No. Sorry, the call OI change today has been 88,000 over here. And in all these cases, it is just 16, 17. So I'll probably need to dig deeper as to why this is happening. But as per the option chain as well, you can see that there is a strong resistance that is visible around 1360 level. So 1340 also they have not broken out. So the option data will tell me that if 1360 holds on the upside, then there is a move towards 1400, right? And if you see United Spirits in terms of range, so this high is somewhere around 1363. So more or less it is pointing out towards, even the option data is pointing out that we are towards the upper end of the range. So we need to be a little more careful on this front and probably wait for the breakout to happen. So as you mentioned, the bands are expanding. That is correct. But on the hourly, you are seeing some contraction happening and there is a sell crossover. So maybe some consolidation can happen. The band expansion can still happen if this goes down today and breaks out tomorrow or day after tomorrow. It will still start expanding. So, I mean, Bollinger Band is not the only thing that you need to watch out for. Check the trend. How is it? Whether price action wise also we are getting a breakout or no. Check the OI strike OI inside range. So to understand the range. In this case, as I told you, there is something happening over here. I mean, I need to check what is happening and why such big open interest are there. Is it just to eat the premium? I mean, I don't know. Why will someone even short over here? The premium is just 2 rupees. So I need to check this, but yeah, I mean, that is how we need to do it. I hope that answers your question, GP. It was a slightly bigger explanation, but it is important to give you the context. Always use higher time frame to judge the trend, and use lower time frame for your execution. It can also be daily and 30 minutes. I mean, it entirely depends on what is your style and how quickly you can build position and exit position. Thanks GP Galan. So yeah, I think that was the last question for the day. Let's catch up tomorrow and let's see what Nifty does tomorrow, and whether we see some clear signs of a breakout or not. So thanks once again, and see you tomorrow.